Welcome. This is earnings with BloombergQuint. We are taking stock of Pidilite Industries for the quarter gone by and what we can expect. We are in conversation with the managing director of the company, Mr. Bharat Puri. Mr. Puri, good afternoon and thanks for joining in. Let me ask you the first question that is to do with, of course, a lot has passed from the quarter that we are going to speak about, and since then, can you just tell us an idea and give us an idea about how things have panned out for the months of perhaps in the months of April and May, and of course to a certain extent June. What kind of progress have you seen, ramp up in production, if at all? If you could give us an idea about the on-ground situation right now.
Sure, thanks. Good afternoon, Agam. As far as the COVID situation on ground is concerned, we went into lockdown at the end of March. We believe, for example, in the last 10 days of March, we lost about 150 crores of sale. If you just do it on a numerical basis without, the attendant year-end loading that happens because people have to, finish off their targets, etc. But at a numerical basis, we lost a fair amount of sales in March. April, pretty much all of the country was closed. May, about half the country slowly started to reopen. Rural, semi-urban India was the ones to open up first. And May saw about half the country slowly getting open. In June, we have now pretty much about between 80 and 85% of the country open. Rural and semi-urban India clearly is largely 90% open now. Urban India is fully open in south, large north minus Delhi. It is the west that remains challenged. The urban cities in western India, be it Mumbai, Ahmedabad, Surat, Indore, are still only partly open or slowly opening. So at an overall level, as we sit today, demand, really the best time to call out where is the new normal would probably be the end of July, beginning of August, when you've had 2 months of at least a large part of the country open. Right now, obviously, there is a certain amount of pent-up demand of April and May, which is playing out in June. But I would say, going forward, rural and semi-urban India appears to be leading the return in a sense. Urban, especially urban in the COVID impacted areas, is still largely to play out.
Okay. All right. So in that case, can you give us an idea about distribution as well, and how you expect things to pan out when it comes to the next quarter, perhaps a quarter and a half?
See, it all depends really on one thing, Agam, which is the whole COVID situation and how, the quicker we go to normalcy, stroke near normalcy, it's now pretty clear we're going to live with this virus for some time, but we have to live with it while winning against it rather than struggling against it. And the sooner that happens, quicker will demand come back. For home improvement companies like ours, for the consumer goods sector, we tend to correlate very well with GDP growth. As long as GDP growth returns, our business returns. And therefore, as we look at it going forward, as I said, we expect rural and semi-urban to come back first. The southern India currently seems to be, minus Chennai, getting back to normal the fastest. The rest may take a little more time, but hopefully in the next 2 to 3 months, the second half of the year should at least hopefully see near normalcy. After that, the shape of the recovery, I'm sure there are many more competent economists who can tell us whether it will be V-shaped, W-shaped, U-shaped, bathtub-shaped, or now I've heard swoosh-shaped. I'll leave that to the experts.
Right. Sure, fair enough, sir. So also a word on input costs at this point. I believe that there are some benefits coming through on account of crude-linked inputs. Besides that, so are there things that are coming to aid when it comes to your gross margins, and what can we expect at this point in time?
See, if you look at our performance last year, our gross margins have pretty much improved by close to 400 basis points. A large part of that is due to the softening of input costs. Our input costs are correlated to crude oil prices. Our largest raw material is a monomer called the vinyl acetate monomer, VAM as it is called, where prices have softened. Prices in this year continue to remain soft. At Pidilite, we've always maintained that we like to manage our business within a range, a margin range of 20 to 24% operating margin. We're now pretty much at the high end of that. If raw material prices actually continue to fall as it is appearing, because right now, not only is domestic demand dull, but actually global demand itself is soft. We will actually pass on a large part of that pricing because we believe, for us, profitable volume growth at therefore these margins is the priority rather than greater margin.
All right. So, on a final quick word on your markets abroad. So, on what the exports that you have, how are things shaping up there in comparison to India?
See, it is again different for different markets. We, in fact, now have a stable international presence. Last year, our total sales of our international subsidiaries as well as exports is now in excess of 1,000 crores. The Indian subcontinent is tending to mirror India in many ways. So Sri Lanka is mirroring southern India, and therefore Sri Lanka is open. Bangladesh is slowly beginning to open, but given the density of population, it will take a little bit of time. It is similar to, so the Indian subcontinent mirroring India. The Middle East is slowly and steadily open. Africa, different countries are at different stages, but are still in the, they in a sense are a month behind in the crisis. So we've got some open and closes like in Egypt, in other parts of Africa. But overall, I would say internationally, the markets seem to be in a better shape than India.
All right. Well, we leave it at that, Mr. Puri. Thank you so much for joining us and talking to us here on BloombergQuint. We wish you the best for the future.
Thank you so much. My pleasure.
All right. Thank you, sir.
Thank you.